Hello everyone. Tesla just released its latest earnings results for the third quarter of 2022. The results were out on Wednesday after US markets closed, and we'll go ahead and take a look into those earnings. But before we can proceed, please take a look carefully at the risk disclaimers and the warnings. Please take a look, read carefully, and we'll begin shortly. Okay, so let's go ahead. Tesla, of course, is the leader of the electric vehicle industry. Mr. Musk, of course, the prolific CEO, and its results are closely watched as always. Now, overall, these were strong results, strong financials, definitely improved over the previous quarter and the year ago quarter, Q3 2021. These are for Q3 2022, the period that ended in September. Now, let's go and dive into the financials first for the third quarter. We had record revenues in excess of $21 billion. Definitely impressive results. Earnings per share were also good at $1.05 per share, and operating income was also strong with an 84% year-over-year increase in excess of 3.5 billion. Now, margins are also an important part, especially in this high inflation environment, as it shows essentially how much money the company is making out of its revenues, essentially. And operating margin was strong, 17.2%. Mr. Musk, during the earnings call, dubbed it as industry leading, this percentage. On the automotive side, however, the 27.9% margin for me feels underwhelming. It stayed there, same as the previous quarter, but it is low compared to recent percentages. Now, one thing we need to note here is that these are strong results, but there were negative adverse impact from the foreign exchange because we have seen how this strong dollar has harmed, we've seen in other companies as well, has harmed their revenue and their profitability. And this was something that the company commented here as well. Now, let's go ahead into the deliveries and production. Now, of course, the deliveries were announced before those results. They were announced at the beginning of the month. We had record deliveries of 343,830 units. Now, that is, again, a record. And production also increased. Both figures represented growth, both on a quarterly basis and, of course, on a year-over-year basis. And that is good because we had a slide in Q2 in both those figures. Now, one thing to note here is that the gap widened compared to previous quarters, the gap between deliveries and productions, meaning that deliveries were quite lower than the vehicles produced. Now, that caused some concern around demand for Tesla's vehicles. Mr. Musk addressed it during the earnings call, and he said that they sell every car that they make. They expect to do that for the foreseeable future, and blamed the gap essentially to supply chain and transportation issues, saying that there weren't enough boats, enough trains, enough carriers to actually support this surge in production and deliver those vehicles to customers. And in fact, he talked of excellent demand. Now, in terms of production and deliveries, this year has been about scaling up for Tesla and not so much about introducing new vehicles. And in fact, it hasn't introduced any new vehicles this year. Of course, the Cybertruck is one of the hotly anticipated vehicles, the futuristic pickup truck that has, in typical Tesla fashion, has seen delays over delays. Now, a few months ago, in the previous earnings release, Mr. Musk had actually said that he expects deliveries of the Cybertruck in the middle of 2023. He did not provide any specifics today, any updates on that, anything new. However, competitors are catching up. We'll actually have beat Tesla on this market, but we will discuss about that a little bit later. And although we did not expect any deliveries of new vehicles this year, there was actually an interesting surprise. It was announced a few days earlier. Tesla will begin deliveries of its semi-truck, the heavy commercial truck, and deliveries will begin in December 1 to Pepsi. First semi-trucks will be delivered to Pepsi, the beverage manufacturer. Now, let's obviously, these are very strong results, and they come after not a mixed second quarter. Third quarter appears strong to me, although there are some caveats, and of course there are challenges ahead for the company, but for the auto industry, electric vehicle, and internal combustion as a whole. Now, Tesla faces increasing competition. Legacy automakers are making strides, pushing into the electrification front. And we also have many EV startups that are doing pretty well. Now, Ford, for example, the storied legacy automaker, has already launched a rival to the Cybertruck, the F-150 Lightning, the EV version of the widely popular F-Series in the US, and has already delivered close to 9,000 vehicles as of the end of Q3. Startup Rivian, of course, has already beat both to the market, and both those pickup trucks, electric pickup trucks, have also seen critical acclaim and received enthusiastically by the audiences. And of course, you have more and more, not only on the pickup truck market, but in general, many companies are making a push there. Now, another area of challenge is supply chain issues. Now, yes, they have been improving, and yes, Tesla has performed better than most of its competitors on this issue, but we did see how these transportation issues did affect its deliveries in the reported quarter. And as a matter of fact, the CFO of Tesla said that this delivery production gap will persist in Q4, and delivery growth target of 50% is probably not going to be achieved for the year. It will be a little bit below the 50% target. So although Tesla has done well on this front compared to competitors, and although these issues have been becoming less pronounced, they're still an area of concern. Now, the other thing is energy and commodities costs. after the war in Ukraine, we saw oil prices skyrocketing, but not oil prices, energy as well, and commodities. Now, obviously, when you have an electric vehicle, you need to charge it. If this cost is the electricity, obviously, if this cost is very high, that sort of it's a way of the appeal of the electric vehicles and may make this shift towards renewable energy harder and more expensive. And of course, we have commodities because batteries use metals in order to be produced. And these have gone quite high as well. Lithium is one of those. In fact, Tesla is considering getting into the refining of lithium, and that is into mining, of course, and that shows how it's trying to adjust to this environment. But again, this is an area that we need to monitor. And of course, that's not just for Tesla, but for everyone in the industry as well. High inflation and high interest rates. Now, high inflation makes cars more expensive. In fact, Tesla has moved with price hikes, multiple price hikes, and other automakers as well. And then there are also interest rates that make funding those vehicles more expensive as well. So definitely we have some issues that could play out there. Again, we need to repeat that Tesla does not see demand issues, but again, it's an area we need to monitor. Of course, we couldn't complete this video analysis without talking about the Musk Twitter saga, on which the CEO of Tesla did comment during Wednesday's earnings call. Now, let's just go back and remind that Mr. Musk wanted to buy Twitter. In fact, he had come to an agreement with the company and they had settled, but then a dispute erupted over the spam fake accounts of Twitter, and eventually he pulled out of the deal, and Twitter sued in order to enforce the agreement, the buyout agreement. Now, in the latest turnaround, Mr. Musk actually wants to complete this deal and wants to do so in the agreed upon price of $54.20 per Twitter share. Now, there was a trial that was about to happen as Twitter sued to enforce the deal, as we have already discussed, as we have already mentioned. And actually, the judge, after Mr. Musk's turnaround, postponed the court trial and gave the two sides until October 28 to complete the deal. So that is something to monitor until essentially the end of the month. Now, Mr. Musk did say today that he believes he's overpaying, but he sees great potential in Twitter. And of course, we need to be mindful of the impact this may have on Tesla. We don't think that it has reflected so far for now, because there are concerns of overlapping. He is CEO of Tesla, Mr. Musk is CEO of Tesla, he is CEO of SpaceX and other companies, so he may be overstretched. And there's also another issue of whether he may need to sell Tesla stock in order to fund this deal. Now, although I believe that these were quite strong results, markets definitely did not react well to the earnings release, and Tesla stock actually dropped in after hours trading. Last quarter was good for Tesla, and let's pull the chart here for a quick look. So the third quarter was good for Tesla, mostly thanks to the surge in July, in line with the broader market and the tech sector. But things have not started so well now and in the third quarter, and we can see that it's exposed to the 2021 lows, which is at around 180, and it's also trading below the 200 days EMA. So definitely we need to look onto the technical outlook as well. Now, that's it for today's video analysis around Tesla's earnings results. Obviously, we have more results coming up. It's we're going towards the peak of the earnings season. We already had Netflix earlier in the week, and next week more of the FANGs report. Amazon, Apple, and others will be announcing their results next week. So the tech sector is definitely in focus over the next few days. That's it. Thank you for watching today's video.